Hi, it's David here with Futures Trading. I want to say thank you for taking the time to watch the video. I do not cover no one else's information. I've been getting asked about the SMC concepts. I don't think there's anything smart about his concepts, and no disrespect to the fellow. Again, I have no qualm with that individual. I just have my own way that I approach markets. I've been of course, trading for years. I'm a self-taught trader, and I've been trying to make you aware of that throughout all the videos, the 68 videos that I've come out with, my approach to markets. I used to be, online with a company and running it, but my schedule that I have, there are other appointments that I have to attend that has nothing to do with trading, and they're important. And so when the two started to conflict, I took my company offline. It's just as simple as that. I don't want a job. That's most important. I want leisure to do whatever I want to do when I need to do it. And so yes, I still train individuals. I do, but it's really not as demanding because when you have a store online, your phone is going off all the time. And of course, you don't want to turn away the public because then that puts a bad name on your company. So in short, I don't want a job. All right. So I don't cover other people's information. So don't ask me to do it. So all of the content thieves that's on YouTube taking that man's information and building their channel around it, shame on you. All right. He's an educator. I'm an educator. I have respect for his information where I don't even trade that stuff. I don't think it's smart. And that's just I don't think there's nothing smart about his concepts. And that's just me because I'm self-taught and there's ways that I trade that conflicts with what he's saying. I don't know a lot about his stuff, but the stuff that I do know, I just don't think it's smart. And I'll go into a little bit as to why I think that. I'll go into a little bit of that. But again, I have no qualm with the individual. I want to make sure I state that. All right. So shame on you if you're taking his content and all of a sudden you're a profitable trader. That's not respectful. And that's really important that you respect him as an educator. All right. If he don't have a problem with it, it's fine. But I still think that if you were profitable before he came along, why not teach people the stuff you know? All right. So that's a whole nother topic. But I definitely think that it's a problem with people that's content thieves. I mean, you get online and you see somebody else's information and then you go and adopt it as your own and then want to simplify his stuff. Whatever he's saying, okay, if you're unclear about his methodology, you need to contact him, ask him. Don't ask me, ask him. And for those that's trying to simplify his stuff, shame on you. All right. And that's all I would say about that. Shame on you. That's wrong. All right. So you may be taking away some of his importance based on the things that he wanted to disclose. And so it's not fair to him. And that's all I'll say about that. Now, I put in this title, and I said it in the video. I only put that title there to have you take a look. I didn't cover any of his content. So anyone that's asking me these questions about SMC, I don't cover his stuff. I don't. In this video, I didn't cover it. I don't plan to. So don't ask me to cover his stuff because I don't cover other people's information. For one, I didn't create it. I'm not the author of his approach. I have my own approach, and I've been introducing it to you. All right. So, and it's simple. All right, it's simple. It don't take all of my videos are simple. They're not complicated. Very rarely do I go over 30 minutes. So I don't take a lot of time to explain to you this information because it's simple. All right. I'm a simple guy. That's how I profit. All right. And I've been doing it for years. It doesn't take some new guy coming on YouTube in order for me to make money. I don't take care of my family that way. I can't do that. So and I have responsibilities, far beyond trading that I have to attend to and take care of. So shame on you guys that do that. All right, that's all I'll say about that. Now, I got a couple of alerts here for you. You can take a look at. And so I know every day. I know he got this daily bias thing. I'll say that. I got a bias too, but it's only built around one price every day, and that's disclosed to those that I've trained. I can tell you there's one price every day the market needs to close at, and that's important today and tomorrow. And so, because it sets the tone whether or not the market will keep trending in that direction, or whether or not the market will reverse. And so, there's one price, really important information. And so, every now and then, I'll put an alert on YouTube. I mean, not on YouTube as well as Twitter, that says what that price is. Now, here I did this back in June 16th. And you can catch the video for this on the channel on YouTube. You can go into the YM playlist and you can watch the video about this information right here. So this is the tweet that I put out. There's the time. There's the date. All right. So and I told you what price level it was for that day. I gave of course, gave you what I thought, and I said it'll rotate back down here. It's really likely that they wouldn't get above here. And so here's the tweet. Here's the before, and here's the after. Now, I just tried to go grab a couple things. That's all. I didn't want to go grab a lot, because if you're following me for any time, you would know this stuff. All right. So this is what it looks like side by side. And again, you can go watch this information right on the channel. Just click the YM playlist, and you can see exactly this information that I'm showing you. I framed out your whole session, all right, at 5:07 that morning. I told you closing above here would help, okay, to stay bullish, and then of course, it closed, above here is ideal for today. So it's like, hey, you stay above here and this would be great. But I told you a rotation back down here is very likely, and you can tell where all these little bubbles is at. That's the static levels. It's something I released to the public for free, and the ranges in 18 minutes. That's the key. In 18 minutes in that video, I gave you static levels that the market turns at, and this is the YM that they turn at every day. And I gave you an accumulation area that they tend to accumulate before they do these big runs. So that's the YM. All right, now let's take a look at the MNQ. So this is a tweet I put out on the 12th, 7:19 in the morning. I gave you a target level and told you that they need to clear this for it to be support. Okay. And there's the target level up here, and that's the tweet. All right. And there's the date. Here's that information. That's the after. Here's the before. Let's put it side by side so you can take a look for yourself. I tend to approach markets just a little bit different than everyone else. That's all. And it's because again, I'm a self-taught trader. I've been doing it for years. All right. So that's really important. 9:30. And I even said, that they could, drop beneath here and then take off. But that's the target level. They made the target level. The whole session. All right, the whole session. Just want to say that. So I don't cover anybody else's information. I don't do that. Ask them. All right. Do not ask me to cover someone else's content. Now we're gonna take a look at the NQ, and I'm gonna go ahead and outline to you the trend. Trend trading is important and it's simple. We're gonna look at the NQ, we're gonna look at YM, GC, and ES. We're gonna look at all three of them. All right. And again, just a few minutes here. I just marked the 19th on all charts. If you have a bias, just go with the trend. All right. So there's your trend. And I put what the trend is on the channel. All right. So you can go to the trading guide playlist and learn what the trend is. You can learn what the range is. You can learn what the statics is. And even this price action method, I put that there too. All of my stuff that I'm showing you is universal. All right. So this is a universal trend that I'm showing you. It can be applied on every market. And so everywhere that I have the green box and these arrows, there's the trend. All right. So take a bias if you want. If you want to just go long, go long. Of course, there's downtrends in there. I just didn't want to mark them all. Now, where they're losing trends, I outline that too. So here's the uptrends after downtrends. All right. You can just take the uptrends. Here's the 930. This is the NQ. There's the uptrend. Now, typically they'll go the distance of the trend. That's the other part too. If you take a notice of the trend, there's the arrows. Here's the trend. They will go the distance of the trend. Now, here we are now. All right, now let's take a look at the YM. My information, not someone else's stuff. All right. Now, again, I've been trading this methodology for years because, again, this is something that I've noticed in my years of trading. I noticed it for myself. I'm a self taught trader. All right. So here's your trend. And of course, like I said, you can go with the downtrend if you want, but if you want to save yourself just a little time, just go with the up. If you have a bias for that day, go up. All right, it's really simple. Now, this is an interesting one here because you had this here, okay, but you would have completed your trend over here, all right, for that. But here's some trending information in here, and these alternatives, all right, in here, if you didn't want to wait for the trend to get set way up here. There's your 930. It went the distance of the trend. Now, remember, the trend was way back here, and it set itself here. The original trend, not the alternative ones, okay? And it still went that distance, all right? So here's the loser because that's a trend after downtrending, and it didn't yield anything. Here's a trend. It gave you a trend distance. Here's a trend, gave you a trend distance. All right, so that's the YM. Now let's take a look at GC. All right, so GC, same thing. There's your trend. It can go the distance of the trend. It can go the distance of the trend. That's a losing trend because it didn't want to go the distance of the trend. Here's a trend. It can go the distance of a trend. After a downtrend, I marked the trend up. And so there's a trend up. It didn't yield anything. Here's the trend having just one side bias, just wanting to go up. All right. And that's all I'm showing you, just bullish ones. All right. So now let's take a look at the ES. All right, so ES, I had to go just outside of the 19th so I can start that trend because this is where the market actually had pulled down. All right, so there's your trend. They didn't hit it right away. Okay, they didn't hit it right away. As you can see right there, here's the low. They did come back and hit it, but not right away. 65, well, I'm sorry, 85 and a quarter, 85 and a quarter to the tick. They gave you the trend distance. All right, so here's the uptrend. Move down, gave you another uptrend after a downtrend. There's an uptrend, gave you the distance of the uptrend. There's another uptrend, and that's just taking the trend. All right. So again, simple stuff. Don't want to put nothing in front of you that you can't readily apply, to your trading. It's simple. And this, again, this is my methodology. I do not explain other people's content. Don't ask me to do it because I can't. And if you want to get caught up to all of that information, you can come to the YM playlist and you can see those tweets. If you want to go see what the MNQ had did, you can go to that playlist there. All right. Now, for all the information that I disclose with with the statics and the ranges, you can find that right in that trading guide, and I will have that link below. Again, this is the universal price action trend. I will make a playlist for it so you can always come back and reference it. I do not think there's anything smart about his concept, at least one of them. Now, the one that I'm talking about is here, the universal price action method. If you win, it's this. All of these videos are in real time. All of them are in real time. All right. So I don't think that there's anything smart about covering 3 bars. And I'll just touch on this before I go. But that's the universal trend that I showed you. All right. Now I'll have a playlist specifically for that. And I'll start making videos about just that. I'll try my best to. All right. Now, what he's proposing deals with this bar's low not touching this bar's high. Okay. Now, again, I do not cover his information, but that's what that is. What I do, now, this is what I've been doing for years. You get a bar and you get another one that trades below this bar's low, and that mid falling beneath that low creates this effect. It should go down. It's not 3 bars to find some gap that you need to fade when it come back to it, as if the market can't trend that way. If you're someone that's trying to catch reversals, if you're someone trying to catch reversals, every 2 candles, red, green, red, green, red, green, could end up being a reversal. So how many reversals are you really trying to catch without losing? All right. So I don't do that. All right. I go with the trend. Set the trend. I'm going that way because you're going to go to trend distance. Really simple. If this bar's mid isn't touching that bar's high, it should go up. All right. I don't cover other people's content. That's what I do. I just show you the simplicity of what I'm offering. All right. So if you see the mid running away from the low, that's the setup. Stop right there. Take the short. All right. Really simple stuff. If the mid is into the prior bar, if it's into the prior bar, you're getting overlap. All right. So don't ask me to cover other people's stuff. I can't do it. And I wish you all the best with your trading. Take care.